everyone, and welcome to the webinar. Tonight, we have an excellent presentation for you. My name is Danielle, and I'm here to introduce the amazing Mary Ellen McGonigal. She has over 25 years of experience, and it's very interesting. I'm sure she'll tell you at some point throughout the course of this webinar, but she actually used to manage $2 billion. That is a lot of money, folks. Now, she is absolutely amazing at long-term investing, okay? She writes something called the MEM Edge Report. This comes out twice a week where you can learn all about her analysis, stock picks, and more. And she's been an amazing part of our team for the last year. I was really lucky to meet Mary Ellen when she came to Austin, I don't know, maybe 2 years ago or so. So I'm very excited to be introducing her here tonight. Now, just a couple things before we get started. Just want to let you know that we are in webinar mode tonight. That means that everyone in the background, when you type your questions, us as the admins can absolutely see your questions. We keep it in webinar mode just to keep it flowing a little bit nice, a little bit easy. But we absolutely can hear what you're saying. Now, Mary Ellen has a very full presentation tonight. She will try to get to your questions, but most likely a lot of them will be answered throughout the course of the presentation or at the end. So if you have some questions, make sure you hold those till the end if we're not able to get to them throughout the course of the presentation. Other than that, can everyone see the screen currently right now? And can everyone hear me okay? Excellent. Awesome. Thank you very much. Great. Well, this has been fun introducing Mary Ellen, but I think it's time for her to take over and let us know what you are going to be talking about tonight, Mary Ellen. Thank you very much.
Oh, Danielle, hey, thank you.
Have a great
Thank you.
rest of your night.
Yeah.
You're welcome.
Yes, I finally remember our meeting a couple of years ago as well, and I'm thrilled to have you introduce me tonight. I know you're a especially big part of the team here at Simpler Trading, so very pleased to be here, excited. And tonight, I am going to be talking about how I have been able to keep a 75% win rate among the chaos that has been taking place in these markets. And it's not just this year. We're going to use some historical precedents and lots that we are going to cover here tonight. So again, super excited to be here. I'm going to get into exactly who I am as well. So again, today, sharing with you ways that you can profitably trade during these really quite trying times. And as Danielle mentioned, we're going to be covering a fair amount of information. So I know it's going to be well worth your time to pay attention. And we're going to go ahead and leave those questions until the very end. And I will be sure and answer each and every question. So welcome, everyone. Hello from sunny Los Angeles. Let's go ahead and get started. I like to begin really any presentation, and I want to give you a good feel for where the broader markets are. So we're just going to spend a minute or two here taking a look at really just what these dynamics are looking like here currently in the broader market. So we are looking at a daily price chart of the S&P 500, and you can see really just how choppy it has been, but let's really zone in on where we are currently, because you want to make sure, of course, when you're investing, that you do have that broader market backdrop behind you so that you can go on to succeed and outperform the market. So we did close today above this red 50-day simple moving average, and that is constructive for a lot, certainly institutions. This 50-day moving average is really what I call the line in the sand. You want the markets to be ideally trading above that key level. So we did close today. That's good. Of course, one day does not a market make. So we're going to, of course, keep a close eye on this. But then some of these outside momentum indicators are giving a little bit more of a cautious view. We can see the RSI in negative territory, as well as the stochastics. Hopefully you can see the very bottom of that screen. So we are getting mixed signals, something very much worth keeping, of course, a close eye on. We can take a look at the weekly chart of the S&P 500. Some of you might not look at some of these longer term views. But when you are looking at a weekly chart, it's going to give you more of a long term outlook as it relates to what to anticipate going forward. So I marked this up a bit here because what I did want to do is highlight the characteristics of the S&P coming out of the last 3 bear markets. This is out of that 08, 09, and then that 18 into 2019 bear, and then that pandemic-induced 2020 bear market. So the key characteristics as we came out of each of those bear markets as it relates to a longer term outlook was the RSI turning positive, as well as this faster momentum. This is your stochastics. So again, taking a look at where we are currently, we did turn positive on these outside momentum indicators. However, slippage certainly going into this week's pullback, we did have that RSI slip back. So it's something that certainly I'm keeping a close eye on. I would urge you to as well, to give you that really good feel for where the broader markets stand and where they might be headed. Going to take a quick look here at the NASDAQ. And again, a daily price chart, not as healthy. We've broken below each of these key simple moving averages, your RSI stochastics in negative territory. So of course, these growth stocks are running into trouble here, as we can see interest rates on the rise. Let's take a quick look at where the strength is in the markets. From my work, you want to be focused on where that relative outperformance is. And it's going to not only tell you where money flows are going, it's going to be an ideal place to fish, if you will, for you to be able to identify stocks that then will go on to outperform the broader market. So this is the 11 sectors in the S&P 500. And very quickly, we can see up here in the forefront a lot in the way of those defensive sectors, staples, utilities, energy, certainly value stocks, likewise with materials. So these are your currently your 4 horsemen as far as areas outperforming. And then here we are with technology. We looked at the NASDAQ in a declining phase, also financials getting hit with that inverted yield curve. So good sense there as far as where we are in the broader market. So again, today, my goal is to give you that ability to find and take advantage of those stocks that are in those stronger areas. It's going to be based on a strategy that I have developed, and it's based on a proven system. So again, on my over 25 years of work. So really, it's not going to matter what that market backdrop is. There is going to be an ability for you to use some of the tools that I'm going to share with you today to help you outperform the broader market. So let's just take a quick look here at energy. This is the energy sector, and it certainly has led the markets this year. Any of you that follow the markets closely, you'll know that this has been the #1 top performer year to date. And this was our identifier back here in the beginning of January 3rd to be exact. And this is when I identified it. Those that are subscribers to my MEM Edge report will know that we identified this downtrend reversal and we're able to add stocks from this industry group that have gone on since then to outperform the broader markets. And here's an example of one of the holdings from that report where we identified Pioneer Natural Resources, PXD, just as that group was turning bullish, still in a very confirmed uptrend. So you can see, despite that volatile background, that there are going to be areas of outperformance that you can take advantage of, despite that, what we are calling chaos that's taking place in the backdrop. Also, it's important to know that not all energy stocks have participated. You can see a chart such as that energy sector and think it would be easy to go on to pick that winning stock, that one stock that goes on to outperform. This is Phillips 66, PSX is the ticker symbol. It did join in the beginning, but since then has waffled and has a return that is nowhere near that broader industry groups. So we're going to share ways that you can help identify and weed out those names that are going to go on to outperform. So here's a little backdrop as far as why my particular style works, and it has been developed over my many years of working in the industry. We're going to get into that, but it has everything to do with drawing upon that experience. And the work that I do is using an historically proven system. We'll get into that as well. And also, it's very, very easy to follow. My strategy and my style is all about taking a fair amount of information and being able to simplify it in a way that is certainly a style that you can also adopt so that you can also go on to outperform the broader market. So I alluded to my MEM Edge report. It is a twice weekly report. And last year, we're going to draw upon 2021 as examples because we can get a full year, and really I can share with you some of these principles and tactics. So last year I did identify 140 stock picks in that biweekly MEM Edge report, and of those I did have a 75% win rate. And this is an example here of those individual stocks selections. And of the losses, those losses were capped. The average was 3% in losses of those 140 stocks that were selected. And then here we have the average return of those selected stocks by month going back in 2021. So here we are in 2022. I talked about that energy sector being that leading sector, and Occidental Petroleum OXY is a stock that made it to that MEM Edge report in the beginning of January, and it has gone on to gain 79%, certainly well above average. Our selected list has expanded to currently it's at about 5, but at the time in the beginning, we only added 3. And of those, we have the clear-cut winner in that group. So we'll get into more as far as why that name has gone on and how I was able to select it. So before we do that, share a little bit of background as to who I am and my background. I do, as I mentioned, have quite a bit of experience, and that's both on and with Wall Street. And Danielle mentioned that I did manage $2 billion in assets, and I'll share with you exactly how that journey unraveled, if you will, or more importantly, how it came to pass. But super exciting. I also was a former vice president at William O'Neill and Company, and I will get more into that because a lot of my work during that time I was with O'Neill. It was working with professional money managers throughout the world, really helping them identify these big winners using O'Neill's system. For those of you that aren't familiar, in addition to that institutional division, Bill O'Neill is the founder of Investors Business Daily. That is a publication that is all about getting people in front of these big winners just as they're poised to take off. More importantly, the system is based on proven history going back over 100 years, studying each of those market cycles and identifying the common characteristics in these big winners. That's how this system was developed. It's one that I have since taken and expanded upon in an effort to help share that with self-directed investors. And it's really just a fantastic, in fact, during my time at William O'Neill and Company, there were bear market cycles. I have many years of experience as it relates to the broader markets. And during those down periods, those bear market periods, we were mandated, I absolutely enjoyed it, to go back and study those prior cycles, because in the markets, one consistency is that history repeats itself. And so we can go back into and those big bull market cycles coming out of that 29 crash. Certainly that 1970s were a very tough period with stagflation, really what worked, what didn't, and all of that is now currently incorporated in my system that I've developed. So also more recently, after leaving William O'Neill and Company, I did found my own investment research firm, MEM Investment Research, which is now being powered by Simpler Trading. And then mentioning that top performing newsletter, MEM Edge report. And I also do quite a bit of work at stockcharts.com. You can check me out there as well. So let's go ahead and take a look. I'm not sure why. Oh, here we are. So a little more in the way of background as far as how did I get to Wall Street. Growing up, really, Wall Street was not a term used in my house. I was not even aware there was a Wall Street. I grew up in Philadelphia. But after graduating from college, I moved in with my college roommate to New York City. And I really had no clear-cut idea of what I wanted to do as far as a career. So I joined a temporary agency, and the first position I was placed in was with Goldman Sachs, and it was absolutely amazing. I was on their trading floor. It was actually a pretty lengthy period. I was replacing someone that had gone out for a back operation, and the excitement of seeing millions of dollars being traded, just really, I knew this had to be a place for me. And from there, I actually did have a mentor at Goldman who suggested I go to what's called the buy side into money management. And I did. I joined a large asset management firm in Manhattan as an assistant to the assistant, similar to my position at Goldman. But I did work my way up, and very much a hard worker, got in early, stayed late, absolutely loved what I was doing. So of course that helped. But more importantly, I worked my way up to the point where I was running 2 billion in assets. And it was over 8 different funds that I was managing during that period. And things then actually got even more exciting when I moved to the West Coast with my then new husband. And I joined William O'Neill and Company. And I did mention that I was a vice president there, traveling the globe, working with many large institutions, well-known, Fidelity, Merrill Lynch, Morgan Stanley among them, meeting with their head strategists and portfolio managers and analysts. And that is really where it crystallized my sense of the stock market and what worked, what didn't, but also interacting with these money managers really gave me a very strong sense of what worked as far as how the broader markets operated, how important certain characteristics were. And we're going to get into that tonight. I'm going to share some of that information with you. And then again, I mentioned I did from there venture out and start my own firm. And this really, having my own investment research firm with Simpler, has been the most rewarding part of my career. I can say excitement throughout my journey, but as it relates to working with self-directed investors, I do get a lot in the way of feedback pretty regularly from subscribers indicating how much I've helped them. And that is very, very meaningful to me. It's something that really keeps me going and keeps this part of my journey exciting. So I'm going to spend a minute here and talk about what makes an expert. And I would consider myself an expert, not only in the stock market, but in this system that I have developed. And if some of you might remember Malcolm Gladwell's book called Outliers. And in that, if you're not, I will tell you, he talks about how to be considered an expert, really in any field. He talks about sports, music. You do need to put 10,000 hours of work into that endeavor in order to become an expert, to go on to become a professional. And I will tell you, certainly from my many years of work, my time, 15 years at O'Neill, each and every weekend, I would get a very large box filled with chart books that I would go over. And this was all part of being prepared that next week to meet with clients and so forth. But an interesting thing about this book, Outliers, that came out in 2008, and I remember it very well, more recently, actually 2 years ago, and a journalist went back and interviewed the two professors that created the study that Malcolm Gladwell used as the basis and foundation for that book. And they had a lot to add. They said that it's not 10,000, it is, and it can be 10,000 hours, but there's something that's more critical as a component to becoming an expert, and that is personalized education. Working with someone that is a mentor will actually cut that hourly time down considerably. And it was one of the key components of those that did go on to become experts. And it was actually left out of that book, but I found that to be really, really telling as it relates to many of you may and are on your journey to becoming an expert, how critical and how you can really cut down that hourly amount of time by working closely with someone who is an expert. So as it relates to why I have my own investment research firm, I'm going to share with you. I first left William O'Neill and Company, and I had it in my mind that I was going to invest my money. And I was going to spend my days investing actively. And unfortunately, I did find out very, very quickly, while I had a solid plan for getting into stocks, I did not have an exit plan. I have to tell you, when I think back on that, it really shocked me. But in hindsight, when working with these professional money managers, the primary part of my work, among also advising them on the markets, is they would provide me with a watch list. And these are companies that vetted out, they knew management well, but they wanted to be alerted to when that stock was poised to take off. And I would alert them. We would talk about the markets, the industries, and so forth, and really left it to their devices, if you will, as to when to exit a stock. So it's something that I did not develop, and I found out very quickly. I'm going to share with you one of my failing trades. And so this is going back to, we're looking at 2010 into 2011, and this is Fossil Group. And I was able to identify the stock coming out of this base in February of 2011, and things were really working out quite well. I did enjoy the great gains into this end of July period. However, you can see how quickly it just fell over this cliff. And honestly, it was really heartbreaking. I did not have an exit plan, and I to the point where I wiped out all of my gains. So that was quite a wake-up call, and it really got me back, pushing my shirt sleeves up, developing an exit plan, and it really got me to thinking I can't be the only one that is not having that execution on the exit side properly. So I made it my mission to do that with my MEM investment research, to work with self-directed investors, and not only share that strategy of getting into these big winners, but I would say even more importantly is sharing that exit strategy. And you can see how critical of a component that can be. So as to how I developed my system from trading, I did talk about this in the fact that while with William O'Neill and Company, and as a portfolio manager, using that extensive knowledge, that historical precedence. From there, I did develop a complete strategy for trading, including what you need to watch out for, how to uncover those top stocks, and most importantly, the top and the right time to exit. And this is the strategy that I have built upon ever since, and have done so really very successfully. So talking about style, really everyone has a style, whether you are a short-term intraday trader, maybe you have a longer-term core portfolio that you are holding on to over time. I just wanted to share with you that my style capitalizes on moves in these faster moving stocks, and once they enter into an uptrend. So my style is really for someone who wants to add power to your portfolio by capitalizing on these faster moving names. Oftentimes, if they are multi-year, you will see triple digit. I'm going to get into some of that as well, because many of my winners, certainly in 2021, we had 2020 as well as 2021, several triple digit winners that went on to far outpace the broader markets. So a few common flawed strategies that I've seen out there, and this is another thing that gets me out of bed, if you will, and drives me toward continuing to help investors. And one of them is buying on the dip, but really ignoring weakness in the broader markets. And we certainly saw that. A lot of people newer to investing came in during that pandemic period, and buying on that dip worked pretty much every time until it didn't. And that would be the beginning of this year. That dip did go on. Certainly in the NASDAQ, it developed into a bear market. And then other common flawed strategies are people that sell too early. You're leaving those longer term gains on the table. In fact, I do get that question not too often, but what is your upside point as far as the price for that stock? And my reply is, I don't have a cap on that. I'm going to stay with the stock as long as it's still in an uptrend. The signals are still bullish. No sense leaving some capital gains or profits on the table. And then also buying stocks that are falling out of bed. This is in line with buying on the dip, but they're not in any way to trade higher. They're below key resistance. I'm seeing that now as well in some of the trading rooms at Simpler. By the way, the people that I've met in the trading rooms are really superior, great people. But there are some questions that lead me to believe that some people are buying these really down and out tech stocks that are not ripe. They're not ready to trade higher and faster than the broader markets quite yet. So let's take a look at what we're going to be covering here tonight. I'm going to be talking with you about how you can trade when industry groups move in and out of favor. That is certainly one tactic that has worked very successfully. And then how to exit confidently, mentioning to you the real key consequences of not, and then how you can get in front of these stocks that are poised to take off and, of course, outperform the broader markets. So let's talk about the importance of finding groups as they're moving in and out of favor. And the reason for that is when a new industry group comes into favor, the upside potential among the leadership names in that group is really huge. And I shared that with you with getting not only into energy, but getting into that leading stock. It's just going to make all the difference in your performance. So let's go ahead and take a look at 2021. And what I'm sharing with you is a view of those 11 sectors ranked by performance. And last year, the S&P 500 did have a 27% return for the year. But take a look at this clear-cut outperformance. This is energy, real estate, financials, technology, and discretionary stocks up here at the forefront. Each of these areas outperformed the broader markets. So from here, I'm going to share with you some other key characteristics, because when you see that huge 54% return in energy, it was not a straight line. This is a chart of 2021. It was not straight up from the bottom lower left to the upper right side of your screen. It really was quite volatile. Last year was a volatile period, certainly not quite as severe as what we're experiencing this year, but it did have its ups and downs. Trying to think if I have a chart of the S&P 500 that shows we had 9 pullbacks, and one of them was a correction in the S&P 500. So very, very volatile. But here we're looking again at that energy sector, and I've highlighted those periods when energy was in an uptrend. So in the beginning of the year, and then also toward the latter part. So these 31% increase here, 28% was dampened by this mid-year decline. We almost went into a bear market with these energy names. The reason I'm sharing this with you is to really highlight the relevance and the importance of staying on top of industry group rotation, because as energy came in and out of favor, other industry groups were doing the same. As energy was declining, other areas were coming into favor that I will get into. But the primary backdrop, the drop and rise with energy, was the move in interest rates. And we are seeing a continuation of that this year, certainly. But as a fact, rising interest rates are tied to rising inflation, and historically, energy is the best performing sector in the S&P 500 when inflation is on the rise. So taking it a step further, here's a daily chart of Devon Energy, one of the better known names in that energy sector. And it's a stock that we had on our MEM Edge list last year. And over an 8-month period, it did gain 129%. This, in fact, was one of the top 3 winners for all of last year. And we were able to identify it as that energy group came into favor. And another energy name from that MEM Edge list report is EOG Resources. And this is that move, the latter part of last year, September into November. We were able to take advantage of that rotation back into energy. So from here, I'm going to share with you some insights because, and really I failed to mention this earlier, but the reason that you want to make sure that you have that sector right when you are looking at putting money to work is from Bill O'Neill's best-selling book, and certainly from my work prior, there's very high relevancy to getting that sector and that sub-industry group right. And the reason is that almost 50%, this is based on historical precedents, almost 50% of a stock's price appreciation or deterioration is attributable to that industry group that they're a part of. So very, very significant that you get that part right. So for those of you not familiar, there are 11 sectors in the S&P 500, and I'm sharing them with you based on their weighting in the markets. And in red are the more volatile areas, the higher beta: information technology, consumer discretionary, and communication services, which are internet related stocks. And then healthcare up here in the forefront as having a pretty heavy weight, but it's more of a hybrid. There's a growth component there as well as a more defensive. Certainly within healthcare, their products are still going to be needed regardless of any economic backdrop. And so as we move down, we can see some of these smaller industry groups. So while energy is comprising only about 3% of the broader markets, pointing this out because you can see despite that clear-cut outperformance, because of its underweight, it's not enough to help propel the markets higher. We've been in a very difficult period, but that said, you can see how getting that industry group right can help you outperform even when the markets are deteriorating. And more recently, REIT stocks are very much in, really just over the last 2 weeks, we've seen a move into these REIT stocks, and a lot in the way of reasoning there that I talk about in my report. Basic materials, this is going to be commodities related, another hedge against inflation. So you can see these smaller weighted areas are the ones that we pointed out as having that superior strength. But despite their underweight in the broader markets, if you really put your mind to it, you can participate in their outperformance as they come into favor. So some of the things that influence the sector, I shared with you some of the rotation that we saw certainly last year. We're seeing it again this year, and it has to do with what's called a business cycle. And it's something that is very relevant in capturing those moves in and out of those sectors. So from here, actually, I'm going to move forward from these weekly charts. I wanted to share with you again, another area from 2021, we talked about financials being up there in the forefront in the way of outperforming, and take a look. It's same principle in 2021 with, while the group was a very superior outperformer, you can see that it kind of moved in and out of favor. And this is, again, very much tied to interest rates. As interest rates rise, now normally bank stocks fare better. They're not doing that well this year, despite a rise in rates. Pardon me. But we can see again that volatility that's very evident in the markets. I'm just going to, if you can bear with me 1 minute. I apologize for that. I have a little bit of a head cold, but we're going to get through this because there's a lot of exciting information that I want to share with you by way of this rotation and you being able to capitalize on it. So again, interest rates last year and again this year being that primary driver as these groups move in and out of favor. So here's another stock from our MEM Edge report. It is a major bank stock, Comerica, and we did pick it up just coming into last year. The company reported strong earnings, and we were able to capitalize on that outperformance in that sub-industry group that moved into favor, 51% gainer. But again, we need to talk about having a solid exit plan. And from my work, I view that as my number one trading rule. So this is Comerica, the same time frame, 2021, and we were able to exit that stock in this beginning June period as bank stocks moved out of favor, and we were able to avoid a 15% decline and hang on to those gains that we had taken part of. So I mentioned to you again that exit strategy and really how important it is. We're taking a look here at Zoom, big winner. This was another big MEM Edge report, triple digit winner in Zoom, but we did exit the stock going into the end of 2021, at the end of 2020, and you can see the big losses that we were able to steer clear of. The stock broke support, big heavy volume, and other stocks that we did remove last year that were able to help us stay with those winners while they were in an uptrend and exit quickly. This is an example. This is Marriott International, and we did get into this last year in March, breaking out of a base, but really, as many of you may know, not every base breakout is going to work, but you do want to have that exit plan. And we did exit with a 1% loss, and then we're able to not experience the loss that then continued on. Another example from last year, Caterpillar, it did break out of that base. We stayed with it, but then once it began deteriorating, we got out of course and kept our losses pretty minimal. Farfetch, FTCH, this was coming out of that 2020 bear market, and we actually had 131% gain on the stock. And again, we were able to preserve that 131% gain by having an exit strategy and went on to do quite well. So let's from here take a look and talk about events that can trigger a stock to move much higher. And these are only a few of the many characteristics. First up, you want to know those triggers because you really don't want to get in too early. You want to time it so that your money is working for you. And you don't want to miss, of course, that move to the upside either. So one of the more powerful pushes that propels a stock to trade much higher and much faster than the broader markets is strong sales. These strong sales will often translate into strong earnings. And that's, from my work, one of your more powerful pushes to see both sales and earnings of a company in a period of sustainable upside growth. So let's take a look at another stock. This is taking us back to 2021, and we're looking at West Pharmaceutical. And I wanted to point this out to you because when we added this stock back here in April, they had just reported triple-digit year-over-year earnings that went on to propel the stock to great heights. We actually almost at 46%. And then, of course, as the industry group and the stock began to deteriorate, we did exit. And pointing out to you that same period when we entered West Pharmaceutical was in line with when energy stocks came into favor back here in 2021. And this is something that I had been on the lookout for, on the prowl for. The group was beginning to firm up. We had our watch list ready of those stocks. West went on to become a big outperformer. And then that is when you, of course, pounce and can really take advantage of that move. Another name, this is really going back historically, a lot of the work while with William O'Neill. I do recall this stock coming out of, this is in '03. The stock broke out of a base and went on to gain 766% in an 88-week period. And that was coming out of that '03, well, 2000 to '03 bear market. We had a lot of these big triple-digit winners out of that bear market. This is Deckers, by the way, DECK, known for their Uggs and other goods. And yeah, so let's spend a minute here and talk about my MEM Edge report, again, coming out of that 2020 bear market. Of the names on my suggested holdings list, I was able to uncover 10 of the 12 biggest winners for 2020. And here's a listing of those stocks that were on my MEM Edge report in 2020. You can see Etsy, NVIDIA, PayPal, all household names now, Advanced Micro, and so on. And we had picked up these names coming out of that bear market. And these were, again, 10 of those top 12 best performers in 2020, all using that system that I have developed, again, from my many years. So why is now the time to master this strategy? Certainly one that I've developed. Well, if you look at the markets, I'm sure many of you are feeling this. We are in an unprecedented period, certainly as it relates to coming out of an historical pandemic, and then more importantly, as it relates to Federal Reserve and monetary policy being quite aggressive. We now, of course, have a war taking place in Ukraine, supply chain issues, global demand. Is it strong? Is it weak? COVID's still a factor. China is still, it may have peaked already, but they have recently had peak COVID cases. So as a way to cut through all of this chaos, to have a system in place, a strategy that's going to help you cut to the chase, get to that area that is poised to outperform, and then from there uncover that winning stock that's going to go on to outperform, is going to really serve you well. It's too, I think, easy to get lost when you can see how the headline news are really causing the markets to bounce. And it's never been more evident to me. I talked about my many years in the markets, and this is definitely an unprecedented period as it relates to what we are seeing in the way of major economic or economist forecasts. There's a very big divergence. Are we going to be entering a recession? Will we have stagflation? Just the really staggering disagreement among these economic experts as to what to be on the lookout for is something I have not seen in my time. So using this system, this sound system, is really certainly more settling as you enter the markets, but it's also going to put you on to the path of outperformance. So following a proven system absolutely does work. You need that really to help keep your losses at a minimum. I talked about that exit strategy. And then you want that ability to vet out the leaders, those stocks that will go on to far outpace the broader markets. And certainly from my work, if I haven't shown it tonight, I'll share with you again. I do have a very clear-cut passion for teaching what I've learned. I want to share that. That is my mission. Certainly, I have been in this industry for quite some time, and I really think it's critical when you have that expertise and that knowledge to pass it along and share that. So it has become my passion to share what I have learned that's helped me to be successful. And I really enjoy teaching others to learn how to trade, showing you how to avoid making those many mistakes that all too often are just too easy. So just another look here, and I did mention I was going to share this with you to highlight, because a lot of people, when you look at 2021, you understand that the S&P was up 27%, but in reality, underneath that surface, we can see this is a daily price chart of the NASDAQ for 2021, and you can see this clear-cut volatility. In the beginning of the year, we had that correction, February into March, down 12.5%, another 8.5% drop in May, difficult period September into October, and so on. So highlighting again that throughout this volatile period, I did have 140 stocks on my MEM Edge report that came in and out of favor. And of those, there was a 75% profit versus loss. And then again, that average loss, another key critical component, was only 3%. So even during this choppy market, using the system that I have developed over my many years, I was able to then come out rather unscathed with that success rate and that keeping those losses to a minimum. So I talked about it, and it does bear repeating the importance of taking learning and educational system that'll help you keep those losses so that you can achieve big wins. And certainly losing money, having stocks that pull back are inevitable. But if you do have a system that you can follow, you want your wins to obviously outweigh your losses. So another study that is something that two different major authors within the financial industry uncovered, that in order to be successful when you're investing, you really only need to win 40% of the time. And the really critical component there is that you keep your losses to a minimum. That's going to be your differentiator. And then you can see you really only need to win 40% of the time. And using my system, I was able to accrue a success rate of 75%. So you can see how critical that can be in helping you outperform. So at this point in time, the markets have corrected. I shared with you where we are currently. The NASDAQ is still in correction territory after a bear market. And when you are emerging out of a correction and out of a bear market phase, this is when some of the most exciting opportunities are going to be presented to you. So when the markets turn, it's really critical that you are ready. It's going to require you having that right education and that correct coaching, that correct system to help you catch those moments. And I'm sharing a quote with you here from Peter Lynch, and some of you may be familiar. He was the fund manager for Magellan Fund. That's Fidelity's biggest, not so much anymore, but during his tenure, it was the largest fund at Fidelity. And his comment was that bargains are what he called the holy grail of investing. And he was talking about a corrective period while he was at Fidelity, and how it is actually an opportunity to acquire more shares at lower prices, of course, but more importantly, this is how great fortunes are made. And I did have the pleasure of meeting Peter Lynch. He did depart prior to my I actually worked with Fidelity. A partner and I, we worked with the top portfolio managers. In fact, I worked with Peter Lynch's successor at Magellan very closely. I did have a meeting with Bill O'Neill and Peter Lynch's successor as it related to the Magellan, where their fund was and so forth. And it was super, super exciting. I would spend a week in their offices there, but they are and were very much embraced the O'Neill philosophy as it related to those key characteristics among these big winners. And hence their funds have gone on to really outperform. I worked with this existing, still current portfolio manager of Contra Fund there, and super exciting as far as talking about stocks and the markets and why this particular stock was poised to go on to outperform the markets. So more importantly for today, did want to emphasize how great fortunes are made when you are coming out of, right now, certainly with the NASDAQ bear market period and the correction in the S&P 500. Once we get going, you'll see even more broadening out in this market and just super opportunities. One other thing I did want to talk about is one of the reasons that the markets are struggling relative to growth stocks is the fact that the Federal Reserve is raising interest rates. They're going to be doing so fairly aggressively. The last time that occurred was 2004 into 06. And during that time, the Fed funds rate went from 1% to 5.25%. So that's very similar to where we are now relative to, we're at 0.5%, but by the end of this year, we will be closer to this 5% level if the raising of rates goes as expected. So I'm sharing with you a chart of that time period of 04 into 05 during that rate hike cycle. And you can see that the markets pulled back initially, similar to where we are now, and then did go on to gain. But even more importantly, I'm going to share with you some of the winners from that period that were great outperformers. This is Autodesk, a top software stock, ADSK, and it did gain when they started the rate hike back in 04. It was in June, and from that period, from June to December, Autodesk was up quite a bit more for the year, but June into year end, it did go on to gain 112% despite that rate hike taking place. Stocks are historically have historically gone on to trade higher. That's statistically what occurs as rates are rising. And here's Apple, also from that mid-June period when rates were on the rise to the end of the year, 125%. So going back and looking at history, there were energy stocks, steel stocks that also had great 200% plus returns during that rate hike cycle. So despite what we are seeing now, I anticipate that we will see a great outperformance from many winning stocks. So I wanted to spend a minute talking about the need, how much personal coaching can help. And I'm going to take you back to that Outliers book, where in addition to those many hours of really practicing, I guess, for lack of a better word, but also experiencing something in order to become an expert, and how that really can be cut down if you work closely with someone. It can really help you enter stocks that are poised to far outpace the markets, preserve those gains, and go on to beat the S&P 500. And you can see where this system, certainly that I've developed, in order to be successful, again, keep those losses to a minimum. This is that 2021, a listing of each of those names that was added to my MEM Edge report. And you can see how that solid system, despite the volatility that was taking place last year beneath the surface, you can really get in and pinpoint those names, pinpoint your entry and your exits, and go on to succeed. I'm just going to spend a minute here and talk about why most people fail at trading. And it is a statistic and something that is all too common. It's something I've seen certainly over my 25 years. And I've really often wondered why some traders do go on to make it. And you can see that I certainly learned the hard way myself as it related to, but here I think are some of the main reasons. And number one is not having a plan. A lot of people will jump in, maybe someone excitedly tells you about a company or a stock and you enter it. You will, of course, need that plan, primarily as it relates to that exit if you are successful in your entry. And then failure to manage risk. This is going to be all about, I talked about the exit, but when we talk about risk, also you need to make sure that your allocation is proper, that you have within your portfolio as far as your percent allocated to each holding. If you are overweighted in areas that are out of favor, or perhaps they're higher beta and too risky, that's going to mean all the difference. And it's something I certainly fine-tuned for myself over the years. Another initial, when I first started, was very familiar with Bill O'Neill's way of investing, and he rarely, I don't think I ever saw 10 stocks. His list was super, super concentrated, but that came from years of experience and having that exit plan. I jumped in thinking I could mimic that, and unfortunately it came over time, the importance of allocation. And then a lot of people coming in, they want to swing for the fences. Of course, we want that home run, and that in turn will bring your emotions into play instead of when you have that system that you can lean on and really use, and really never adopting a style. I've seen this a lot, certainly currently or over the last 6 years working with self-directed investors, and it makes sense. You try something, it doesn't seem to work, you try something else, as opposed to having a real style that fits you, whether it's you are a long-term investor, short-term, and it's a style that you believe in. Having belief in that system is going to be another key component, and then sticking with that style, really regardless of the broader markets, and not using technical analysis. This is something that not everyone embraces, and I believe that that is a key component in addition to others as it relates to having success. Having that ability to analyze the chart is going to make a huge difference. So let's talk about what you need as it relates to, again, this is all about trading through this volatility, being successful. And number one is learning how to be consistent. And I would tie that back to having a sound system that you believe in. You are going to need to know the details of a winning strategy that's going to help you outperform, and then uncover when to avoid a trade. A lot of times, again, people, even if you watch CNBC, you'll see the CEO. In fact, very early in my career, I did see a CEO presentation that was so convincing, and very much to find out later that a lot of what he was saying, I'm not going to say it was untruthful, but it did not come to pass. So you want to know when it is proper to get into that trade and when to avoid it. And then working on the mental side of trading. Not a lot of people talk about this, but it is really key. From my work, from my many years, I know that having a sound system can keep those emotions at bay and keep you calm during these chaotic periods. For many years, certainly when I started MEM Investment Research, I was working with a number of hedge funds, and I would often get a call on those days when the markets would just seemingly fall out of bed. I'm thinking of Brexit and some of those other major headlines, and just being able to calmly step back and use this sound system to analyze what action may or may not have been needed during that time. And then also building a plan for trading that fits your style. We talked about everyone having a style. You may be, again, intraday, you may be a swing trader. Really, there are really 4 types of styles in investing. I would say for me, I am a hybrid, and as it relates to swing trading and longer term. But again, having a plan that fits your given style, and you want to have all your questions answered as you're moving through your process of learning a given system.
Wow, Mary Ellen, that was great. I mean, I really enjoyed that. I love so much what you said about how much there's so much opportunity right here, right now. Your energy picks were great. And you know what I loved even more is when you identified the stop loss, or I guess just shouldn't even call it the stop loss points, but the exit points. That is absolutely critical. And I think a lot of people got burned without having those points in time last year, right?
Absolutely. Yeah. Yeah. Last year, again, from the surface, it looked easy, but underlying, there were a lot of traps as it relates to the rotation in and out of those different groups with interest rates. So, absolutely. Yes. So, tonight, I did want to introduce a mentorship that I am going to be offering, and it's going to help you discover how to go on to find those outperforming stocks, even in periods that are uncertain, certainly such as now. And within that, there will be 8 strategy sessions. There's going to be live trading sessions, and then bonus small group Zoom calls as part of that. And this really is an opportunity for me. Well, I would say to you, it's an opportunity of a lifetime because it is not something I have offered in the past. I'm not sure I will do it again, but I'm super excited about doing it now. And I urge you to take advantage of this mentorship. It's going to provide an opportunity for you to have that hand holding, if you will, that accountability, and most importantly, that knowledge that I will impart to you as it relates to achieving profitable trading. And you will be working with someone who has gone through many, many market cycles and has been able to successfully navigate those periods. So let's take a look at some of those steps that are needed for you to achieve profitable trading that I will be sharing with you. Each week, we will review a new trading strategy in depth, and then I will teach you when, why, and how to use that strategy. We're going to follow up each of those lessons with a live trading room so that you can turn those theories that I will be sharing with you, those strategies, into really trading them live. And then each step of the way, I'm going to answer your questions. There will be an opportunity for you to have a live Zoom call with me. These are going to be very small group. This is going to be actually a very limited mentorship as far as the number of people that can participate in it. We are going to keep this very small so that those that do participate can benefit the most. Over time, it's been found that when we have smaller groups, they do tend to work quite a bit better. So it's going to help you establish that solid foundation and an understanding of this strategy that you can take with you and help you again going forward for many, many years. So I'm going to talk about the different package. Actually, there is this one primary main package, and it is $49.97, and it will provide you with those 8 live market sessions where I'm going to share with you the different topics that we are going to review, and it's going to have live strategy sessions following those market sessions. And another big bonus here is you also will be provided with an annual subscription to the MEM Edge report that I've been talking about. There's also a pre-recorded simpler moving average course that is a part of that. And then I talked to you about that weekly small group call. And that's going to be really an ideal time to dig in for those that may have questions as it relates to their portfolio or what they may have observed in the markets following our strategy session. Just a really unique opportunity to be in a small group setting and have your concerns answered, your questions. And this is what I talked about in that mentorship in the beginning, that difference that can really help you become an expert in this proven system. So as I mentioned, it is very limited. Only the first 50 traders that sign up will have the ability to take part in this incredible mentorship package. And I'm just going to share with you as we go forward. I'm going to mention to you some of these different strategy session dates. They will take place from 3:15 to 5:15 Central Time, and it's during this period that, again, these detailed sessions, we will get into very specifically what drives not only the markets, these individual groupings, but these underlying stocks, so that you can also embrace and utilize this system. So here are some of the different topics with these mentorship sessions. First up, how you can time the markets. We will get into that very detailed, but also breakouts and breakdowns, really specifically as far as what you need to have on your checklist to tell you that this stock is poised to break out and move much higher. And then also, is that stock breaking down? And I talked about spotting, sector rotation, and portfolio management. This is going to be all about that asset allocation to put you on the path to being a professional investor. And then that last session, putting it all together. This is where we take everything that preceded that and you walk away with this proven system in and at your fingertips. So another area I talked about where there's 8 live strategy sessions that are going to take place, and they are going to be 2-hour sessions on Thursdays. And here are the different dates. Here you'll be provided with alerts to trades that we take during those live strategy sessions, and we will go through, I think, really exciting to put to work what you have learned during real live market strategies. And again, I talked about that MEM Edge report. The value is $1,270. You will get this bi-weekly report that is all about developing your strategy even further. This report talks about markets, about sectors, and then drills down to ways you can capitalize on that. And then I talked about these bonuses. The Simpler Moving Average course is one that is very critical piece as it relates to many of those other strategy sessions that we talked about. And then also the weekly small group call, and really designed to help you understand even deeper and further those different strategies that we will be talking about. And another item worth noting is the fact that in addition to this interactive chat, live calls, there will be 36 hours of instruction that will then be capitalized upon and actually expanded on in these chats and these live calls. So a lot of what I am offering to you is it's unprecedented. And it's something that when I was working with professional money managers, that they would pay in order to even have access. It was $25,000 on up to $100,000 a year. So relatively, certainly, this is quite a bit less expensive, but a lot more in the way of really refined and personalized instruction. So here are the different packages that I did want to point out to you. And this is that mentorship, very limited as it relates to those that can join us. And I look forward to, I can see people already are taking advantage of this offer, and I'm super excited. That's great. And I want you to jump in now while you can, while there is still, there are openings and opportunity. And another offering is the MEM monthly package. Quite simply, this is my MEM Edge report that is offered on a regular basis. There should be a link there. If you're more interested in a quarterly MEM Edge report subscription, that's also being offered as well. So let's take a look again at some of the items that are part of this program. We talked about the bonuses, and then also wanted to share with you some of the things that other people that have been taking advantage of my certainly newsletter and other courses. I've gotten tremendous feedback. And I mentioned that to you before, that this is really what keeps me going, if you will. Lisa is someone that I've worked with in the past, and she really appreciated. She did email me this concept, or the fact that I have a consistent rules-based methodology, and I've been able to really take this information and filter it down and teach her, among many others, how to take advantage of this proven system. And John was talking about my ability to deconvolute messy market situations into easily digestible education and learning tools, so that even for new people, you can jump right in and learn this system. So I did want to share that with you. And also, there's a new payment way that you can pay for this mentorship, and it is using PayPal, and it allows you to really stagger out your payments. If that is something that works better for you, you can use PayPal now. This is pretty new, but also very, very exciting. So yeah, here are the different packages again, and I do look forward to working with you again. I can see people are already taking advantage, and that's really great, exciting news for you, as I will go on this journey with you to really help you strategize, help you develop this very, very sound system to so that you can go on to outperform the markets. So I do have time to answer some questions for those of you. If they are, I'm going to go ahead and check that right now. And I see we do have a couple of questions here. So there was an initial question at the beginning as far as what is going on with the sell-off in transportations. And for those of you that are not familiar, transportation, trucking, rail stocks have come under selling pressure. And a lot of that has to do, the initial sell-off in that particular area had everything to do with analyst downgrades. And certainly as it related to rail, there are weekly, actually, rail, trying to think of the particular terminology, but they were seeing a decline in usage of these, and certainly the lack of fullness in these rail cars. So there was a deterioration there that then analysts added on to as it relates to transports. But we did see a nice rally in airline stocks today. Based on Delta Airlines, strong numbers. They've been able to increase earnings because people are traveling more. And in Delta and other airlines, you may notice they have been raising their airline rates, their airfares. So that could counterbalance that sell-off. And so once entered, what is the exit strategy? And hopefully I did share that with you as we moved on. Another question was, do you trade options on them? It's not something I actively do, but I do know that a lot of people use this system to identify stocks poised to trade higher or lower, and then from there utilize options to take advantage of those moves. And do I use any of the simpler indicators? Certainly, I'm very familiar. I use among my trading platforms, stockcharts.com. They have that squeeze. That's something that I certainly use very closely. Danielle just introduced me to her hot zone as it relates to earnings, and that's another exciting indicator because I'm all about earnings and using historical precedent. So yes, I do. And then, is it possible that the increased cost of energy is one of the more important sources of inflation? Absolutely. We did come out with 2 new inflation reports this week, CPI, the Consumer Price Index, and then wholesale prices. And both of them cited energy cost as being one of the reasons that we are still at 40-year high with inflation. So for sure, energy, and I'm sure you're all feeling that pain at the pump, filling your tanks with gas. So it says that another question here was about the website displays in the reports. Do I have midweek reports from the same period so I can see how your buys and sells progress? Yes, we absolutely do. I have all of the reports on file, so I'm not quite sure who asked that question, but certainly that would be available for sure. And then this is another question relating to using this system for options. Absolutely, yes, there's no doubt about it. And it's something that you can use this system to get in front of these stocks, but more importantly, use options to amplify your returns. So yes, you're mentioning that I hold positions for various time lengths, and that will have everything to do with the markets, of course, with that environment and with that backdrop. But certainly using the selected expiration dates would be a component that could be built in based on the broader market prognosis, the strength or health of that underlying industry group. So another question, when you make stocks picks, do you identify the time frame, target price, time of entry? And so this is another great question as it relates to options, and I do. So for instance, when I identified energy as an outperformer, I did talk in January about the concept that oil prices were close to that triple digit mark. And from my experience, something that is the fact that when oil prices are above 50, a lot of these energy companies can then make very good profits. And at $100 per barrel, the profits are extraordinary. So yes, I talked about that being a long-term play. And then also there are other components in there that this mentorship will touch upon as far as ways to really get a good feel for the length of that potential uptrend. And a lot of other underlying components that are in there. And then tell users when to buy and the stop levels and objectives. I don't get that precise with that MEM Edge report. I do identify buy and when, as far as when to buy, prices and so forth. But I do not do upside objectives. And I did talk about that. It has a lot to do with when these stocks get into these uptrends. No sense leaving any money on the table. And yes, I do sector ETFs. Absolutely. That's a big part of it. We were able to capitalize on last year's move into genome stocks with one of the ARC funds. This year, we have another ETF taking advantage of a sub-industry group in healthcare. So for sure, it's a great way to get a diversified, being able to participate, but in a diversified manner. So how advanced do you need to be for most of us? Yes, so you've been trading for 6 months and a basic understanding of technical analysis. So you will be able to take advantage, and that's a great question, something I did not address. The level as far as experience for this mentorship would be a beginner that has a basic foundation on through intermediate. And that would be an ideal as far as a range of experience that would benefit the most from this mentorship. And then do you take smaller profits, at least partial? Well, yes, in this volatile market, I have been certainly more agile as it relates to the stocks and coming on and off. And then is it primarily for buy and hold or advantageous for options? That's a great question. Yes, buy and hold is one style that would work well, but most certainly absolutely advantageous for options trading. And again, really amplifying those returns that could be presented to you. And then do I utilize both long and short trades in order to keep my profits more balanced? And at this time, I do focus primarily on long, but oftentimes when I remove a stock, it goes on to be an ideal, great short trade. So super, and I'm seeing people sign up. I'm very excited. Gamma Girl among them. I can't wait to see you in this mentorship. I'm really looking forward to it. Jerry is another individual who just signed up. I'm very, very excited. And then a subscriber for over 2 years, and you purchased my online classes in the past and you enjoy my trading system, I'm the best. That is so super to hear. This is, again, that kind of thing that really keeps me going, if you will, because that's what it's all about as far as really sharing that knowledge. So great news, guys. I am really excited about this mentorship, really excited to dig in and make a huge change in your life, certainly your lifestyle, with this proven system. And I'm not seeing any more questions at this. Oh, I do. Let's see. Andre subscribed, I believe, and AK. So we have a number of people coming in. Great job. Thank you. And if you have any more questions, you can contact me at maryellen@simplertrading.com. And that's it for tonight. Hope to see you and look forward to seeing you in the mentorship. Have a great evening.